Thank you again, Keith. I am pleased to introduce Ty Sagalow. Ty is the president of Innovation Insurance Group, a firm that we at Assured Research work with closely. And Ty, although you wouldn't know to look at him, has been in the insurance industry for 30 years in really interesting positions. A substantial portion of his time was at AIG, where he was, among other positions, president of AIG Product Development, chief underwriting officer and general counsel of a little company called National Union, chief operating as president of Innovation Insurance Group, which is a consulting firm that specializes in assisting the insurance industry in the development of innovative growth strategies and the development of new products. And I would submit that this topic is right down the middle of Ty's fairway. So with that, Ty, let me turn it over to you.
Thank you, Bill. Bill just concluded that real growth in the insurance industry is possible, and that smart companies look beyond mergers and acquisitions and simply trying to time the market. I couldn't agree more. What we're going to be doing in our next phase of the webinar is looking at innovation and insurance, and specifically looking at what has been done in the past, what's happening now, and what does the future give rise to. But to begin, we look at, well, why innovate in the first place? And if you are going to innovate, what is innovation? Did the insurance industry ever innovate? Are they innovating now? And if so, by whom? And what does tomorrow look like? And what happens if we fail to innovate? Finally, we'll be concluding with Ty's top 10 do's and don'ts of insurance innovation. So why innovate? The problem that we all solve and that Bill has, just explained very, very well is that over time, whether you are a widget manufacturer or you're providing a service, you're going to have competition. And the more competition, the more that your products or services become a commodity. And the more they become a commodity, the more your profit margins are squeezed. So the question is, what do you do about it? Now, there are a number of philosophies out there. I picked the top 3 that one hears most about. The first one's not really a philosophy, but it says everything worthwhile has already been invented. Now, this is supposed to be attributed to Charles Holland Dole, who was the commissioner of the U.S. Patent and Trademark Office from 1899 to 1901, and he allegedly said everything worthwhile that has already been invented anything worthwhile that to be invented has already been invented. Now the reality of it is, for those who like looking at historical facts, he actually didn't say that. He actually said the opposite. In fact, what he actually said was that, in my opinion, all previous advances in various lines of invention will appear totally insignificant when compared to those inventions which the present century may witness. So he viewed that the 20th century will encompass inventions of a type and quality far beyond what we have ever seen before. However, there was a patent commissioner that said something similar to everything worthwhile has already been invented, and that was Henry Ellsworth, who in 1843 said, "The advancement of the arts taxes our credibility and seems to indicate the arrival of that period of time when human improvement must end." Well, fortunately, human improvement did not end in 1843, and I believe has not ended yet. So what it really comes down to is someone is going to innovate. And do you want to be a first mover of that innovation, to have what is called and was created in 1988 by Stanford Business School Professor David Montgomery, the so-called first mover advantage? Or do you want to be a fast follower? Now, both of these philosophies, try to create yourself or wait for somebody else to create it, and then if it works, follow it in a quick manner, are legitimate philosophies of innovation. However, I particularly believe that the fast follower philosophy does not at the end of the day maximize profits. That at the end of the day, companies that grow and that companies that are profitable understand that to do that, they have to listen to their customers. And if they have to listen to their customers and solve their customers' needs, which, by the way, is different than solving their wants. Henry Ford once said that if he paid attention to his customers' wants, he would have built a faster, smaller horse. But smart companies do listen to their customer needs. And if they can solve that need better than the next guy, they will grow. So this speaker believes in the philosophy that's called innovate or die, that has been indicated to be said by Bill Gates and many other people. But whether you're a fast follower or whether you believe in this humble speaker's opinion of innovate or die, the question becomes, what is innovation? So here's one version of what innovation is. You have all of these ideas, and you're carefully looking at them, and you're studying them to figure out which ones will grow, in this case, into a chicken. And the chicken that is looking at these chicken eggs is your new product director, carefully looking inward and carefully nurturing these ideas to see which one will grow up and become a live chicken. Is innovation this? Or innovation, is it this? Now here we have the eyes of a baby, looking out into the world, studying what is out there, taking it in with a degree of innocence and without pre-notions or preconceptions. In my humble opinion, this is innovation. Innovation has to be looked outwards, outward into the world, outward into society, outward into your customers, outward into your distribution channel, and to solve the problems of the world and your clients representatives better than the next guy. So how do you go about doing that? Well, here are some so-called words of wisdom. First, when do you innovate? I say you innovate every day. Now, that doesn't mean that you create a new product every day. Companies like AIG back in the day would create a new product or service every 2 weeks. But certainly creating a new product every day is not what I mean when I say innovate every day. What I mean is listen to your customers every day. Listen to them with an idea of what their needs are, what keeps them up at night, not what you have to sell, and you're waiting till they say something that parallels a product within your portfolio so you can jump at them and sell your widget. Think about your customers every day. Talk to your customers every day. Listen to your customers every day. How do you do that? Well, what we will see is that the richest companies, meaning the most profitable innovative companies, innovation starts at the top. In a little while, we're going to be hearing from the words of Hank Greenberg, and then we're going to be hearing from the words of Mike McGavit. But regardless of the company and regardless of the industry, innovation must start at the top. And then you have to create the right culture, and that means hiring the right people within that culture. And we're going to be talking a little about what that means, but it means not having a fear of failure, embracing failure, in fact. I think it was Woody Allen that said that someone that doesn't fail regularly isn't doing anything interesting. Then you have to develop the right process. Now, the process begins with idea creation or idea discovery, product development, and product launch. Luckily, there are a number of videos, there are a number of white papers, there are some books written on how to do that. And then finally, reward innovation. Never punish innovation. There is no failed ideas. As Albert Edison said, he did not fail 1,000 times before he developed a light bulb, but he successfully found 1,000 ways not to develop a light bulb. So has the industry done this? Has the industry innovated? Well, yeah. If you look at the last 100 years or even the last 30 years, there are many good examples of innovation. In the product field, directors and officers liability insurance, environmental liability, ERISA liability. ERISA was created by the federal government, that's the Employee Retirement Income Security Act, in 1974. Within 3 months of the creation of that act, there was the first ERISA liability insurance policy. Employment Practices Liability, created months after the 1991 Civil Rights Act. More recently, Y2K insurance, cyber insurance, and new to the market within the last year, reputation insurance. But remember that innovation is simply not products. One company, one insurance carrier, calls their innovation department proposition development, not product development. And there's a lot to be said for that, because at the end of the day, you're creating a value proposition, not simply a product. And so beyond product, there is distribution. Remember the days that you could buy insurance at ATMs in the airport. Outside the United States, you can sell insurance on 7-Eleven. There's microinsurance, which is sold by people who deliver fertilizers. At one time, I created a product that covered the untimely death of cows in India. And it was sold by the guy who delivered the fertilizer for the cows. And then, of course, one cannot forget about the Internet, which exploded the insurance industry as a new distribution channel. One must also look at service in innovation. Risk engineering, that's not a cow as in an animal, but is control of well. Remote printing, PDFs. And then finally, a type of innovation that most people don't think about, which is organizational innovation or structural innovation. A number of years ago, a major carrier decided to co-locate claims and underwriting so that the claims examiner and the underwriter would sit next to each other. That simple structural change resulted in a massive value proposition to the client. And at the end of the day, that's what innovation is, a significant value proposition from the point of view of the client or the client's representative. So who has done this well? Well, I could talk on and on about it and not even be close to how articulate Hank Greenberg is when Hank is talking about the innovation and the culture at AIG during the 40 years that he was in charge. So what I'd like to do now is have about a 2-minute clip of Hank talking about the culture at AIG and talking about innovation. The way you do this is you click on the hyperlink below the picture. I will say that again. You click on the hyperlink below the picture. Let's do that now. And then you'll get hopefully you are back. You can now click out of that window, and you should be back looking at the window of the picture of Hank Greenberg and AIG. There's a number of things that Hank said that is worth mentioning. Right? He says that AIG was restless. They were passionate about finding new ways of solving their clients' problems, that they sought high-risk areas because that's where you were going to have the most profit, that they didn't go worrying about losses, but rather they went seeking profit. But at the same time, they weren't foolish about it, that they researched it, and that the other thing that he mentioned is that sometimes AIG guessed wrong, and that didn't seem to bother him. That's the concept the Harvard Business Review and Clay Christensen called a smart failure, understanding that you're going to fail. And then in Hank's words, you go back, try to find out what went wrong, and then fix it. So if that's the past, what does the present look like? Well, I'm not going to make a qualitative judgment on the present. I'll let the present speak for itself. But these are examples of what business insurance has awarded the 2012 Innovation Award winners. The first is a handbook on financial risk management. That is a book to tell you how to manage the risk. The second is a database on weather information. Now, it's not insuring the weather, it's just telling you what the weather is. The third is an application for companies that are interested in multinational insurance. Now, notice it's the application that won, not the actual insurance. And then finally, another example is a predictive modeling scheme. Predictive modeling is a way in which insurers can, among other things, reduce the cost of their payments. One could argue that many of those are not the traditional innovation that Hank Greenberg was talking about, but we can look elsewhere for customer-focused innovations as well. Look at personal lines. Accident forgiveness is the one that comes to mind. That was the interesting concept that said that if you pay a premium for years and years and years and years and never have an accident, when you have an accident, we won't increase your premium. Perhaps more interesting is the vanishing deductible. The vanishing deductible will increase the amount of your loss payments by reducing the amount of your deductible if you've had a good loss history. And finally, it's worth noting that there is some product innovation, of course, that's happening. And an example of one that was awarded an innovation award by Business Insurance was called Investment Edge, which covers SEC investigations by the Securities and Exchange Commission. But one can't help but wonder whether the innovation of today, how that compares to the innovation of yesterday and the innovation that Hank Greenberg was talking about. Are we getting lost in our ability to respond to the client needs in a real way? And if we do, what happens? Well, again, I can talk about this, but I will prefer to have someone a lot more articulate than I talk about what is the current state of innovation and what happens if the insurance industry does not do a better job of innovating. Again, this is Mike McGavit on the future of innovation. He's the CEO, global CEO of XL, and this is a 1-minute clip. Click on the hyperlink below the picture to open up the window. You'll get, again, my website. You'll get a woman, and click on the arrow, and you'll hear this clip. Was able to get the clip. For those of you that could not get the clip, you can access the website directly by cutting and pasting the hyperlink onto your web page at any point in time. But in essence, the most important thing that Mr. McGavit said was that the current insurance industry is not listening to our clients and our clients' needs and are not innovating to the extent that we should. And then he had a fabulous line, which he said, if we don't do this, if we don't start to innovate and listen to our clients' needs, we will become irrelevant. What an amazing statement by a CEO of one of the largest insurance companies in the world. If we do not innovate, we will become irrelevant. So that's the past, and that's the present. What about the future? Well, here's Ty's top 5 products that you will start hearing about within the next 12 to 24 months. The first is reputation insurance. Now, I cheated a little bit here because there has been 3 carriers that have come out with reputation insurance in the last about 15 months. Zurich came out with brand assurance in conjunction with Aon and WPP in 2011. Later in 2011, AIG came out with Reputation Guard, and then in 2012, Munich Re came out with Reputation Insurance. Some of those products are available with limits up to $100 million. If you are not familiar with those products, I would recommend you talk to a quality broker or a consultant that can advise you. If you are a carrier and you don't have a standalone reputation insurance product, you might want to think about creating one. But in my humble opinion, within the next 12 or 24 months, we're going to see more reputation insurance products or brand assurance products on the marketplace. There is at least one supply chain product out there, but I believe there will be more. Climate change liability is probably 2 to 4 years away, but I expect that there will be standalone policies that cover climate change liability, as case law continues to indicate that climate change liability is not covered under GL. Intellectual property policies have been attempted over the last couple of decades, but I will see more in the marketplace over the next 12 or 24 months. I believe there will be intellectual property policies that will do various things from defense to offense to even insuring loans based upon intellectual property as collateral. And then finally, cyber insurance have been around for about 12 years. According to some studies, as much as $1 billion in cyber insurance or network security insurance or privacy insurance. But I believe this product that is already available by about 39 different carriers will continue to evolve, and those carriers that don't have a cyber insurance product will find that they have to have one within the next 12 to 24 months. Additional resources are available from a number of different places. This is a somewhat plug for my own website, but there are a number of white papers and videos and templates all available free at www.innovationinsuranceGroup.com/innovation.html. And then finally, I like to conclude with Ty's 10 do's and don'ts of innovation. Number 1, do innovate every day. 2, do start from the top. 3, do create the right culture, right people, and create an efficient process. 4, do create a dedicated team if you are big enough. If you're not big enough, think about having a dedicated individual. Call him a chief strategy officer or a chief innovation officer, possibly a chief risk officer. 5, do ask for outside help if you need it, and you probably do. Don't be afraid to ask a good broker, a good consultant, or others to help you with your innovation culture. The 5 top don'ts. Don't encourage stupid ideas. There aren't any stupid ideas. There are ideas that have not worked. There are ideas that haven't worked yet. There are ideas that need to be modified. Embrace the idea of smart failure. Don't, and that brings us to number 7, don't punish failures, reward them. In a company that I work for, we gave a reward. We gave, I think, a $50 gift certificate to the top 10 ideas that came in every quarter, whether or not we thought they were going to be ones that we could use, just to keep the ball rolling. Don't think now is not the time to innovate. Don't get hung up on the word innovation. We did a survey in one of the companies I work for asking our clients whether they wanted us to innovate. By and large, they said no. That either meant that they had given up on our particular company innovating, or they didn't like the word innovation. So we asked the same question the following year. And we said, do you want us to do a better job than our competitors in responding to your needs? 100% said yes. We then asked, do you mind if we call that innovation? The response of our clients were, we don't care what you call it, just do it. And then finally, number 10 on Ty's top 10 list of do's and don'ts, don't ever hear yourself saying, one day we really should. One day we really should look at this thing called digital film. One day we should really look at the idea of an airplane. One day, one day, one day. So with that, I conclude my remarks. Any questions